There are no shortcuts to building wealth today. It takes time, effort, sacrifice, and diversification. But today, diversification means something different than it did in the past. You deserve a more secure way to protect and grow your wealth. At Delta Harbour, we take this to heart. Our mission is to help by inviting you to add physical gold and silver to your wealth strategy. Book a free consultation today and let us show you how to protect and grow your wealth through the ownership of physical gold and silver. Let us show you the Delta difference. All right, everybody, welcome. Another edition of Hard Money is upon us. Good to have you along here, whether it's Sauga 960 AM. Thank you for joining the show, or online, the video cast version, which are downloadable and watchable anytime, youtube.com/Delta Harbour. Harbor with a U, because we're Canadian, first of all. Secondly, this investment is all about you. So check it out, deltaharbor.com. More details. Darren, as probably you would have guessed, this would be the post-election show. And I'm sure everybody's ready to move on from this point. Meet the new boss, same as the old boss. But there you go. How are the markets doing, pal? What's new?
Well, listen, this week is like most. It's giving us further insight on why we need to protect our wealth, why it's growing increasingly important that we focus on a way to balance and take into consideration the things we already have, the assets we already hold. But in this post-election show, John, this week on Hard Money, let's talk about a few topics that are very important. One, gold and silver. Let's get started there. Gold and silver look great this week and remain in a buyer's market for sure. There's no two ways about it. And if you look at gold and silver's movement, we got a little jittery in the markets this week. There was some downside in the North American markets, happened fairly quickly over a 2-day period, Monday, Tuesday, and by Wednesday, of course, with the Fed speaking and the Fed minutes coming out, there was no change in interest rates, and there is talk of tapering further, but the liquidity window remains open for most businesses, large institutions, what we call the too big to fail institutions.
Sure.
And so gold and silver came off a little bit from where they had risen. But effectively, the point to be made here, John, is that they responded beautifully, exactly the way we wanted them to. Both gold and silver started to traverse much higher. Gold moved very rapidly towards the 1800 mark, and silver moved back up towards the 2310 mark. And as we tape the show here today, both metals are slightly off of those. Gold is trading around 1750, silver around 2250. And that's the story. They are here to protect, offer insurance, and do in course time what they have done for the last 20 years, John, which is when our expectations grow that there could be some pullback in the market, there is always opportunity, and it's abundant. But one of the best places I've found to park money and to help my wealth, to diversify my wealth, to give me a different perspective on what is possible in terms of returns on investment, I use gold and silver, physical, and that's what we did this week. The news was a bit of mixed news, bag of mixed news.
Sure.
Building permits in the U.S. were up, and so were housing starts year over year. But new home sales were a lot less than last month, so they had dropped even though they were positive. They came off a lot more than last month. Oil inventories continued to fall in the U.S. They were down more than expected. And I would suspect, John, going into the last quarter, unless there's a miracle, gas prices are going nowhere. They're staying exactly where they are, going higher. Interest rates stayed the same when the Feds met this week. They kept the U.S. interest rate the same, the British interest rate the same. I suspect Canada will follow. Canadian retail sales down, but as much as they were expected to expand by headlines, at least what we were expecting, they did not. And they will blow that headline up for sure because it was still a positive number. But John, the reality is they were down. Jobless claims rose in the U.S., despite the fact that headlines are telling us people can't fill job vacancies. In fact, the jobless claims rose week over week. So imbalance there. And with the Feds in the US, that is, looking to seemingly somehow slow their money printing and start tapering, their bond purchases, it definitely gave the markets a boost near week's end, which did put some pressure on silver and gold to the downside, but it changes nothing, John. The damages have already been done. Expectations ranging from the possibility of aging contagion through Evergrande, which we'll discuss, to debt ceiling issues, to problems with inflation, and those worries, they have changed the tune of many analysts who now believe the market top may have come and gone, and it may have done so this spring.
Again, reaching out anytime during the show or afterwards, we give you the number all show long, 1-888-335-8645, deltaharbor.com. So as we kind of mentioned off the top of the show, Darren, here we are post-election, some $610 million lighter for all of us, which is excellent news. Same thing, no big change. I think the Liberals were expecting to slide in a majority, and they didn't rock that boat. So here we are. We literally haven't changed much. So what does that mean with this minority Liberal government moving forward for gold and silver? In your opinion, what do you think that means?
Well, like you said, John, first and foremost, it really changes nothing. There's not much here that I look at and jump for joy over. Having an election, if anything, John, meant they had to make more promises to be in the same position. So instead of just taking what they already had, taking the next 2 years and enjoying life as leaders that don't have to worry with the support of the NDP, they instead went out, spent a ton of money. They have another 4 years of Liberal minority. Trudeau, if he knows what's good for him, will not call another election during that time. Instead, we get saddled with more spending programs, more creative ways to use more debt. And if we look ahead to spring, a massive possible change in the way we are taxed. And by taxes, I mean, start with the banks. They talked, the Liberal platform talked about a bank tax. Trudeau's plan calls for more than, I say, $4 billion, I believe it was, to be sucked out of the bank profits with a corporate surcharge amounting to about 30% plus increase over current levels. Now, the bank tax could come right out of dividends paid to shareholders, which include millions of people with RSPs containing not only bank stocks, but mutual funds and ETFs that hold those bank stocks. And if you don't already know as a listener, the banks make up about a third of the TSX, and therefore every security reflecting that index. This is a tax on retirement nest eggs at a time when most people don't have enough saved. There is just a significant error made here in the judgment of where this money could come from. And it's the first of many taxes, I think, that are going to hit us. He talked about a hit on REITs. They're going to go after REIT corporations with higher taxes. Not a solution, because they are not the problem in housing, John. The red tape is the problem, not allowing the amount of building that's needed to calm the storm in terms of increasing the supply. But again, they went after REITs, which if you settle down and look at the numbers, they really aren't the problem. The personal tax load they talked about, Trudeau's not daring to call another early election, so he's now dependent on his friend TikTok Jag and the NDP support. So we expect personal tax increases if you happen to be part of the wealthy. And by wealthy, I mean an annual income of, let's say, 300,000 or more, which is very few of our listeners, John. But nonetheless, if you have investment assets in your portfolio which have earned capital gains, you're going to get hit too. The folks that are in that tax bracket, they're going to expect to have a new tax bracket being created and an increase in the capital gains inclusion rate. Wow. And those items are not in the platform, but are likely in the economic statement slated for November or the March budget. So I expect more personal tax load for sure, more housing demand. His platform is going to create more demand for housing. There's no two ways about it. He created the first ever home savings account. That's a milestone. It's the first ageist, let's call it what it is, ageist tax shelter available only to those under 40. And again, without being too over technical on everything, and never before have people been able to shelter up to 40 grand, write the entire amount off their taxable income, collect the refund for doing so, and then invest it all without paying tax in residential real estate, the profits on which will be tax-free. So this is a moment in which the older folks got penalized. The newer folks younger folks under 40 got hit with a welcome. And there's much more than that, John. We'll save a little for after the break. Yeah. But this is a time to hold gold and silver. This just reiterates the problem that we have in Canada, which is divide. It's being experienced all over the world. We're uncertain. We don't know. We don't understand whether the variant is going to push us further into more problems for the economy, any more than we know if the stock market can actually rise on its own. Pull away all of that funding, the money printing. Can we really survive on our own? Would I really want to risk it or chance it? I wouldn't. I'd own gold and silver to protect yourself, give you insurance to make money for tomorrow.
We'll drill down a little deeper in that regard later in the show, but lots more to go. We're going to catch up on what's been happening over the last rest of the week anyway. And you want to reach out anytime, 1-888-335-8645, the number deltaharbor.com. We'll continue after a short break. Hard Money right here on Sauga 960. Welcome back. Hard Money, you know it's here. Darren Long and John Scholes here. Darren's giving you all the information you need to make that wise investment and open up your portfolio to something maybe you haven't considered in the past, and you should be, especially now. And that would be hard assets in the form of gold and silver. Physical metals are what we're talking about here. More details anytime after the show. 1-888-335-8645. DeltaHarbor.com is the way to do that. We were just talking before the break. I know you want to continue the conversation, Darren. The post-election Trudeau minority government is in place. It's going to be around for a couple more years, or at least 4 if he doesn't pull another election, which probably shouldn't. What do you see that going forward for gold and silver and everything else to continue that conversation?
Well, there's a bromance. Jag and Trudeau are going to be together on it, making decisions, and more than likely we're going to see more spending, more debts, and increased personal taxes on businesses. It's going to be harder to be a citizen of Canada and be happy about your wealth. And I think that that's the perfect reason to be invested in different types of assets, especially gold and silver, given their track records, John, both up over 300% in the last 17 years. That's a huge average per year. And analysts agree the top of the markets may have come and gone. There may not be much that governments can actually do around North America to calm the coming storm. We're going to talk more about that in a minute. But as it relates to the government, we were just finishing off on the new home savings account for those under 40, and it's 40 grand, and basically it converts to a big chunk of money that they can use tax-free, put towards the wealth of their principal residence. And of course, if they buy that principal residence and then sell it, it remains tax-free. So it's a big chunk, it's a big thing, but it's ageist. It's definitely leaving out those over 40. But anyways, it's here. It's part of their platform, and I believe it actually adds to the amount of craziness in the real estate market that's already there, and it could significantly increase available deposits. It's going to allow more young people to buy and borrow. It's going to augment demand and jack prices as a result. That's where I'm thinking we're heading, and I'm sorry to say it because I've been a proponent of saying that housing prices would slow somewhat, but I did that in part based on my belief that we were going to have a change in leadership at the federal level to conservative, and B, that there was going to be put in place more fail-proof ideas that would prevent real estate prices from getting so far out of control that 10 out of 10 people can't afford it because nobody can afford that money. As it stands, though, combined with the ability to use tax-free RSP money and the Liberal pledge to issue tax credits to cover most closing costs, I think the election stands to make real estate considerably stupider than it was. So ultimately, I see that's where it's going. And in terms of their total platform, it doesn't end there. The Liberal plan is to run a deficit, I believe, of around $150 billion next year, and there's no commitment to bring the budget into balance whatsoever. The Liberal plan details over 100 new program spending initiatives. They're going to add around $78 billion over the next 5 years. Revenue increases are pegged at around $25 billion, about half of that coming from the banks, provided they play along, which means ultimately your pockets are getting burned if you own bank stocks in any way, shape, or form, either direct or through mutual funds or ETFs. You are going to get punished for that. Your RSPs are going to get punished for that. Because the bank stocks, which were doing perfectly fine, didn't need any help. And yes, banks make a ton of money. They were also making us a ton of money. So that was a good thing. There's no provision in the budget for higher interest charges on $1.3 trillion in debt, which are a certainty by 2025. Deficits are now structural, well, routine spending like 30 billion for the subsidized childcare initiative that they talked about is never going to be rolled back. Meanwhile, 40% of Canadian families pay no net income tax at all. I mean, I don't want to digress here, John, but it's a very frustrating situation. And I ask myself all the time, how is this even remotely sustainable? Right. And I mean, we have to think about this from a practical perspective, because people will say, well, listen, that O'Toole didn't get elected. Well, I'll tell you who the tool is. It's Bernier, because his party, which got no seats, which did nothing, they took 5% of the vote, which means that could have been as much as CBC analysts indicated that this could have kept 24 ridings from going conservative.
Wow.
So Trudeau wins. There's not a single PPC candidate selected, and even Max himself failed. So that tells you what his own people think about where he lives and where they know him best. So this is a harbinger of things to come, John. We have a tremendous amount of uncertainty going forward. How does the rest of the world view us now? What do they think of us? We're wasteful spenders. I mean, we're a resource-laden country that can't even keep oil prices in check. This is a very, very tough time, and I think you have to ask yourself what's best for your pocket. And I mean, every penny that you can put in your pocket, the better. Owning gold and silver is private wealth. It's holding your hand, tangible wealth. You can add it on to your existing portfolio, and it's easy to do, and we can show you how at Delta.
Yeah, there's not much balance moving forward. I mean, the conclusion from all this so far is it was a huge waste of time. It was basically, rearranging deck chairs in the Titanic. I mean, what the hell was the point? But, you talked a little bit last week about Evergrande, I believe the biggest Asian home builder. Well, China put a finer point on it. Not sure everyone knows exactly what this is or how this could impact the world. So maybe shed some light on it again.
Yeah, this is part of the things that we've been watching over the last little while. I mean, Evergrande is not a new story. Evergrande is China's real estate behemoth. I think they're the second largest builder in China. We don't call them Evergrande this week. We call them Not So Grand, John. But the reality is that they were involved in housing, and they are, as I said, China's second largest builder, at about $300 billion worth of debt. They are due to pay interest payments on that debt this week. They failed to pay it on Thursday evening. And now we wait and see. 30 days grace period. I suspect the Chinese government is going to come in and bail them out. But the problem is, John, that they have their tentacles in everything. They're invested not only in housing and the supply chain for all the housing raw material. They're also heavily invested. They have theme parks. They have a professional soccer team, football team. They've done stadium development. They've got, they're in food and agricultural. They do spring water. They're in the health industry, finance industry, and much, much more. And so this is the possibility of contagion, not only in China's market, but the rest of the world. If China's market is going to slip and slide because of this Evergrande situation, then we have a monumental situation on our hands, which is going to develop and going to eat away at the world's economy. And right now, this is a lot more serious than people are giving it credit for. I don't think people understand it. They don't know. If you're a listener to this show, I highly recommend you get familiar with. But not surprisingly, with this whole Evergrande situation, fiat debt is the problem, as is the case with every company that fails. Their stock is sliding and has lost near 80-90% of its value in the last year. And they're expected to require a bailout. As I said before, the Chinese government are going to have to come to their too big to fail institutions and make a decision. Do they let them fail and burn, or do they throw money at them? You're going to hear many analysts talk about this as a big, huge Ponzi, that there's really nothing to it. This is just a front for another way the Chinese government was trying to let people know their economy was still on full burners and that it was still growing. You'll have many analysts predict that this is the outcome of that, and that because the company got so big, it had its tentacles in all aspects of building around the world. And without that proposed bailout, this is likely to mean that they are going to go down. And if they go down, look out. The fallout from that is going to be worldwide. And I'd hate to be part of that company right now. Its leadership must be absolutely shuddering in their shoes. But again, good for gold and silver. And how do I know? Already in the past week, John, we've had gold and silver premiums in China rise. The sales of gold and silver bullion rise. People are frightened. This is not only the second largest builder in China, but they are the 122nd largest global company in the world. and they are on the brink of collapse. And so if they've missed this payment deadline, that gives them roughly 30 days to get back to another fix for this situation. I don't think it's going to happen, and we'll see what happens. But listen, gold and silver, that's where they're turning. That's where the Chinese are turning, and you're going to see more develop out of this story for sure.
Yeah, you should consider turning that way too. We'll give you some details on how to get that started if you haven't got that as part of your portfolio. Start with the phone number 1-888-335-8645 to reach out to Darren and the rest of the team at deltaharbor.com, harbor with the U, deltaharbor.com, and then youtube.com/Delta Harbor to watch these and any other video casts we've done in the past and other stuff too. It's really instructional. It'll get you some good information moving forward for your hard asset portfolio. More details on that after a short break. This is Hard Money on Sauga 960. Welcome back, Hard Money. Reaching out, Darren Long and his team. Real simple, 1-888-335-8645. DeltaHarbor.com. That's Harbor with you. This investment, this portfolio that you're going to build shortly is all about you. Hard assets, gold and silver are what we're talking about. Darren, give it some details. How do you begin? Because people are... they're champing at the bit to get going with this. So how do they do it, pal?
Well, John, as you said, the first and easiest way is just head over to the website, deltaharbor.com, and there you'll get all the tools you need to make this happen, as well as being able to research and find out more about why we believe in gold and silver beyond just the headlines and what we talk about on a weekly basis. There's a whole world of information there, and it's something that I think everybody should have, whether they own gold or silver or not. You should be educated about the reasons why people around the world are turning to gold and silver. It is an eye-opener. It is something that we highly believe is a necessity for everybody's wealth and the protection of wealth. It's an insurance policy, but when the times are good, you make a ton of money. That's the potential of gold and silver. So, John, it starts with there at the website, but the fastest way to do it is just to simply make a phone call, make a purchase, open up an account, fund the account, and take your product home with you or have it delivered. So we can do direct purchases, whether it's gold bars, silver bars, or gold coins, silver coins. The only coin we offer, by the way, is the 1 ounce maple leaf coin. We got that question quite a lot this week. Yeah. We don't do collectibles or numismatics. You're not going to find that type of thing on our website. We're buying the strict bullion in the purest of sense for investment purposes. And this is the perfect way to start with a mixture of both metals, gold and silver. And we'll talk and expand on the idea of why gold and silver when you do make that first phone call. And that's easy to do. Direct is free delivery over 1,000. And you can do that any time of the day. In addition to that, if it's a security risk for you, if you believe having 10, 20, 100,000 worth of gold or silver in your house is not smart, then we offer storage. And that storage is segregated, allocated storage, which is at one of our numerous facilities around the world, the closest being here in Toronto. It is a facility in which you can visit your product, so you can hold the product in your hand, see it, take pictures of it, and then buying and selling happens by phone call. And that makes it very easy for you to stay liquid and to add to your stack once it's in there. And you can bring existing bullion. If you're not happy with the place you're currently at, or you have questions about that certificate you thought was real but wasn't, and you want to convert your holdings, or you want to talk more about it and get a second opinion on it, we can talk about the storage program, and we can obviously get you into storage very easily, and you can come and go as you wish. In addition to that, John, we also offer the registered accounts, and I don't think we spend enough time talking about the importance of this, because I think most people, John, can relate in terms of their own wealth to the idea of having an RSP or a TFSA. And if you have kids and you're looking to build their wealth for the purposes of college, purposes of university, or something further on in life, you might want to have an RESP, in which case you could also have gold and silver in there as well. And this can come in the form, this account can be brand new money that you have in the bank right now, or you could use money from another account. This week, we opened up from about 10 different institutions, and that's probably one of the heavier weeks I've had, generally speaking. Funds coming in from clients who are buying gold and silver to put in their RSPs and TFSAs. They usually come in from 3 or 4 different institutions, usually the other banks and whatnot. But this week was a heavy week, and we had a number of institutions that were existing out there that people are invested with, and they opened up their account through Delta and then transferred some or all of their accounts at the other institutions over to Delta without penalty, under the umbrella of the RSPs or TFSAs or LIRAs or RIFs or LIFs, and then prep themselves up to add gold and silver, an additional huge bonus for your wealth and ensuring your wealth and holding tangible hard assets. So that's an option as well. And then the final option, which we have, which is financing. If you want to push this to the nth degree, if you are a person who has disposable income to do so, you're in a position to take advantage of the silver and gold market craze, you may want to use financing. And we have an account called the collateralized financing account, which allows you to borrow up to 80% of your purchase. So rather than putting out $100,000 for gold or silver, you put out as little as $20,000. And we can talk about the ins and outs of that. And John, that's available through our website. Also, we have a nice comparison chart that gives some pros and cons, some differences between all the accounts. And we make it really easy, John. We make sure that we stay in touch with people and that they know it's an ongoing relationship. That's the delight that we have in being open every day, is that we get to talk with all these great clients, find out where they're from, who they are, and their reasons for buying gold and silver, which they change every single day. But we're here because we want to protect our wealth in some way, shape, or form and grow it. You know, when we wake up next year, is our money going to be worth as much as it is now? Will our dollar go as far? I don't expect so. I think that inflation is a serious concern right now. And if we add that up with the uncertainty about what governments plan to do with their tapering, with interest rates, and what we just talked about earlier with the Liberal government here at home, I think you get a pretty clear picture that recession is a possibility going forward and that it might be sooner than later. I would not want to be naked in my wealth without hard assets like gold and silver when the markets do decide to pull back dramatically.
You know, it's interesting, based on all this, I don't know if people realize that your recommendation is buy and hold and add to these assets. I mean, the registered account part that you mentioned is obvious. Most registered accounts, people are looking to keep those in there and grow them until they retire. And really, this is the way I think you look at gold and silver as, you know, there's a very outspoken, flamboyant proponent of gold out there who says, you know, your gold is for your golden years. I know you know who I'm talking about. And I think that's a good way to look at it, right? You add to this thing and just kind of forget about it till you turn around and you've got a nice stockpile and you say, wow, now I'm going to retire and I've got this investment that has made a lot of money over the years, and it's safe and it's stored and it's in my accounts and I'm good to go. I think that's really the idea of this whole thing. You're not day trading gold coins. You don't do that.
No,
right?
you don't. You wouldn't, John. And this is the key moment to understand that. If you're coming aboard to a place like Delta Harbour and you're uncertain of what this means, I'll tell you, it does not mean day trading. It doesn't even mean weekly trading, to be honest with you. We might be lucky if we get one or two great opportunities to capitulate and take profit off the table once or twice a year in these self-directed accounts, where you're going to see major changes in a marketplace that warrant lightening the load, maybe taking some profit off table or adding some additional finances to your gold and silver positions. Again, with these self-directed accounts, our goal is to educate people, to help them understand when it's good to hold it and when it's not. And we're delighted because the track record speaks for itself. Gold and silver have been tremendous assets to hold in a portfolio. And we continue to be day by day impressed by everything that gold and silver has done for people's wealth. And I think that the feedback is that this is something they are proud of, that they're happy they have in their wealth, and that many feel they can't live without. The uncertainty of what the next 10, 15, 20 years is here, it's growing into a kind of a bit of anxiety, John. People just aren't as comfortable and confident as they used to be. If it changes, again, Delta will be among the first to say gold and silver is no longer necessary. But right now, I don't know of a single individual investor who does not or should not have gold and silver in their portfolio.
Want to flip channels to flip tracks just for a second when we come back from a short break, Darren, that about high ratio mortgages. Want to get into that conversation. Then we'll go back to how you build this portfolio of yours if you're listening for the first time or not for the first time and you haven't done it yet, taking the leap. We'll convince you, at least open your eyes why you should do so. But got to get the phone number out before we take a short break. Coming up right now, 1-888-335-8645. Just call, have a conversation. Don't commit. Just get some more education about the whole thing and then move forward from there. DeltaHarbor.com as well. That's Harbor with a U. We'll continue. This is Hard Money on Sauga 960. Welcome back. This is Hard Money. Thank you so much for tuning in. If you're listening to Sauga 960, come on in. The water's warm. We're going to expand your mind on how to bolster your portfolio, whether you're just into the usual stuff and registered accounts that people have, stocks, and so on and so forth. Wait, don't have any physical metal. Well, we're going to tell you how to get that metal very shortly. And if you're on YouTube, youtube.com/Delta Harbour. Sail over there anytime to watch some past videos, learn a lot more as well before you make that big move to call Darren and his team and get some of these hard assets into your portfolio. Because Darren, let's face it, there's a certain coolness about having physical gold and silver. That's part of your wealth. It just is. It's been around for thousands of years, and it's got a certain cachet to it. You can brag about it, but it's at the end of the day, it's a great investment in the long term. So I know you want to get back to how people can get into that, but high ratio mortgage, maximum can be borrowed. This sounds a little bit scary. You put this in our notes today. What is this all about?
Well, number one, high ratio mortgages are those where the buyer puts less than 20% down on the purchase price. Currently, buyers are limited to home prices of less than 1 million. Right. But if the proposed changes go through, this will increase by 25% to 1.25 million. God. And I marked in my own notes because I believe it's BS, because it encourages more debt, more problems. I mean, at what point, John? And again, I give way to what we just saw in campaigning. Did a single listener hear anything about a reduction of budget? Did anyone hear about, tightening the strings? Did anyone hear any sense being made about the need to make sure we keep our spending in check? I mean, we are going to be a bankrupt society in the next 20, 30 years if we do not get this into check. And this is part of the problem. This is another issue this week which creeped up. We have a crazy housing market. And we've had a number of people being interviewed over the years. And more recently, we had a good friend of mine, Asif Khan from Remax Realty in Markham. But ultimately, this is the voice in real estate, unfortunately, has not really started to divide. They have really kept a strong front in their belief that housing prices go much, much higher from here. We just went through an unprecedented 12-month, 15-month period where during COVID, we've experienced housing shortages. We've experienced crazy high prices on places all around the GTA. And again, it's leveled the playing field. Whether I'm buying a home in Bradford, Ontario, or whether I'm going to buy a home in Markham, Ontario, housing prices on average are now the same. Yeah. And so there's no more divide or reasonable expectation that if I drive a little further north, I get a better price. If I'm driving anywhere north of, let's say, York region, all the housing prices on average, a detached home, are all going to be the same. There's no more value dependent upon where I'm living. What if I'm not on the Young line or on the 400 line? What if I move east-west? There's all kinds of those things that come into play. They can't all be the same price. There are reasons why when you're living in the middle of nowhere in, let's say, Elliott Lake somewhere, that a detached home at $1 million should be a mansion. And versus what you'd get for $1 million in York region, Richmond Hill, or anywhere like that. Yeah. This is just completely out of whack. It's gone completely crazy. There's no sanity when it comes to this real estate and understanding it, because to understand real estate in Canada and Ontario in particular, you have to understand what the root cause of the high pricing is. We do not bring enough supply to the table. It's pure and simple. Builders have so much red tape that it makes us the most difficult nation in the G8 to get houses built. I mean, think about people who own cottages. Think about the problems they're having just getting a permit to build a shed. They've bought this very expensive property, which is way overpriced. Sorry you paid so much, but you did. Now you can't even build a shed. You can't even add on a small addition because the red tape is so, it's so expansive. But ultimately, John, it's not the only problem. There are others, and part of it is that instead of going at the root problem and looking at what we can do to bring more supply in market, they bring more dollars to the table. Hey, how can we stretch that credit a little further? It's no different than a credit card. It's just expanding the amount you owe. Eventually, you owe them everything. You owe them your house. You owe them your car. You owe them your life, and you got to start back at square nothing because you paid too much. You used too much money. And you didn't think sensibly which is you got to, at some point, start cutting your expenses. You cannot keep going into this ever-ending, black hole of debt that we've created in our country. And ultimately, these are the reasons why, if you're a listener and you agree, you should be owning gold and silver. This is ultimately the reason why you buy an ounce of gold, 10 ounces of gold, 100 ounces of gold, depending on where you are in your wealth and your disposable income. But John, this is ultimately just another set of debt problems on top of debt problems that we already have. And I don't like where it's leading. It tells me more than ever that I need to have a stable path, a goal plan in mind, and I need to look at ways to diversify my wealth strategy. And I think as a common sense thing, we must look for alternatives to our regular traditional markets. We can't rely on paper investments forever. And we need to look at things like gold and silver and the reasons why they've come up so fast in the last 20 years, why they're becoming part of so many people's plans, why firms like Delta exist and didn't exist 20 years ago. These are all questions you need to ask yourself. And then ultimately, once you've got your answers, make the determination for you as to what's right, gold, silver, maybe both, but ultimately to get gold and silver into your portfolio.
It's interesting too, because you mentioned on the real estate front, and beyond the obvious buying and selling problem we have, everything you just mentioned in the last 6 or 7 minutes, it festers in other places. I have a relative, my niece, as a matter of fact, is a manager of the real estate course in one of the local community colleges here in the city. And they have got to use a battering ram to shut the doors of the classroom of all these kids wanting to get to real estate course. They cannot get enough people in these classrooms. Everyone thinks they're going to be a millionaire. Everybody thinks this real estate situation we're in, this is the norm. You buy a house in 30 seconds, you sell it in 20 days, not even 20 days, 20 minutes. The house is gone. I mean, the inflation, to your point, these kids all think they're going to get rich off of real estate. They don't know what it's like to grind for 4 or 5 months to sell a house when the market is more balanced. That's scary. That's really scary. And that's another offshoot of what you're saying with the housing prices. Everyone's like, wow, this is great. I'm going to sell 15 houses a week. No. That doesn't last forever.
It doesn't. And that's the problem now. We're seeing so many people have, real estate as a second career, as a second alternative, as another option for themselves. And I have many friends that are in that situation. These are hardworking 9-to-5ers, blue collar, white collar, and they've taken up real estate as a second way of getting some income. And why not, John? I mean, ultimately, this was a crazy period of time. Real estate, in terms of transaction fees for real estate, reached 6% of the GDP right now. 6%. Never happened before. It's crazy to think that large chunk of the GDP is all as a result of the buying and selling being done in the markets. And as you know, the word housing crisis rolled off the lips of Trudeau, O'Toole, and Singh at most campaign stops. And all the parties put measures to make property more affordable at the heart of their campaigns. And it's hard to know what the worst voter turnout in Canadian history means, however. Were people afraid of the virus? Did Elections Canada really screw up the process that badly? Was the election an unwanted summer distraction? Do people just not believe the promises? Or was it that this wasn't such a big deal to them in the first place? I don't know. But ultimately, I think going forward, John, if we don't keep housing in check, and we'll talk more about it in the last segment, this is what crashes our economy. This is what ends up doing us all in. And when you're paying, when you're going north of Aurelia, let's say up to 400, and you're paying over $1 million for a detached home in a suburban community, there is trouble on the horizon. I'm unfortunate to say it, but it is. There's trouble on the horizon.
More of that coming up, in the overarching question when it comes to this investment, why Delta? We'll cross that as well after a short break. The number to get in touch and have a conversation with Darren, just like this, and the rest of his team, 1-888-335-8645 and deltaharbor.com. We'll continue. This is Hard Money on Sauga 960. All right, welcome back. Hard Money. Few minutes to go here. Reaching out, I'll give you the number as we get going here for the last few minutes of the show. 1-888-335-8645. deltaharbor.com. That's Harbor with a U. deltaharbor.com. And online, of course, the website and youtube.com/Delta Harbor to learn and watch a lot more of Darren and myself doing these shows every week. We want to wrap up before we get into why Delta and some get down to brass tacks and some details, Darren, about how to get in on these investments, the hard assets. I know you had a few more comments to make. Just just wrapping up the situation we're in with real estate and high ratio mortgages. It's a scary world we got going on around here.
Well, based on what happened in the vote, John, I didn't think prior to this vote being announced that we were going to be able to push much higher in prices in terms of housing. I now think that due to this vote, the unfortunate response is going to be that we can, in fact, go higher. And I would suggest that this is a reason why every single speculative home buyer, somebody who continues to want to investigate making a living from speculating in real estate flips or things of that nature, I think that they need to give heavy consideration to some caution, maybe perhaps in terms of what they're doing, because I think prices are about to go higher. We announced earlier in the show, based on the platform that the Liberals put out and got voted in on in part, that there was going to be an increase to $1.25 million or so to these new home buyers that had previously been capped with their 20% payment at $1 million. And so that in of itself is going to certainly encourage more borrowings, higher prices. And if you're selling a property listed at $995,000, just wait. Soon you can ask $1.245 million for it, because you're going to be able to take advantage of that new thing. So again, talk to my friends in real estate. They all see this happening. This is not a good situation or what we wanted to hear for new home buyers, but there's more. The very cost of mortgage insurance will be slashed by 25%. And this is significant since everybody adds CMHC premiums to the mortgage principal, which are then amortized, amplifying the impact. Now, libs say this will save buyers by about 4% of the cost of a home, which means they can spend 4% more. And in the GTA, that's about $40,000 tacked on to the average price. Third, the federal government wants to finance your closing costs. The first-time home buyer tax credit is doubling to $10,000, which we talked about earlier as well. This is money that can be used to pay for land transfer tax, legal fees, your mover, or a new fridge, or whatever you want to make a home purchase a little bit easier. Again, what does it do? It increases demand. And the jewel in the crown of property pumping is the first home savings account for those under 40. We talked about it being ageist. It means 40 grand can be contributed, used to reduce income taxes, grown tax-free in a shelter, and then withdrawn, also without tax, to buy a home with no payback of refunds received. And it's an RSP and TFSA and a lawn rocket fuel for the market all combined. What does it result in? More demand, John. So this is where we're going. So for the first time in a number of months, under my expectations of what we're going to happen and where we are in the housing market, I am changing my tune somewhat. I believe housing prices are about to go higher, and I believe demand is going to be ramped up, and spring will be the hottest market we have ever experienced in the history of the Canadian housing market. And this is all going to happen at a time when debt is going to reach such high levels in Canada that we're going to lose our ability to understand and comprehend what that means to us, the danger that it presents. You've got to take some of that disposable income and spread it around, diversify your wealth a bit better. You have to take your traditional assets and you have to add things like gold and silver. If you're smart, you'll do the research, you'll get educated, you'll go to sites like deltaharbor.com and you'll read about why gold and silver have been tremendous assets for the last 20 years. And I think that if we look in the large perspective, knowing what we know now, we have another minority government, a waste of money spent, and it just shows you the mentality, the philosophy of the Canadians right now, which is we don't care. We don't care. We're going to spend more, and we're going to get caught. As soon as this blows apart, and as soon as interest rates start to rise, we are going to get caught. And if we get caught, John, we're going to have a severe inability to pay back that debt. Foreclosures will occur. There will be a reckoning of sorts, the likes of which we've never, ever seen. And so I am preaching to everyone that will listen the importance of diversifying your wealth. If you're buying a new home and you have disposable income and you're putting together a traditional wealth plan, add some non-traditional assets like gold and silver. It wasn't too long ago, your uncles, your aunts, your grandfathers, your grandmothers did this on a normal basis. We're getting back to that point right now. This economy is going to push itself to the outer brinks of what it is capable of doing, and the landing that we're going to have is not going to be soft. It will be hard. There will be a reckoning, and ultimately we will pay for what we have done in terms of creating this debt, creating this situation, and allowing things like housing to rise so rapidly unchecked. That's the default that I'm sticking to, and that's why I want gold and silver in everybody's pockets. You can start by using Delta Harbour.
Last minute of the show to go. Darren, just give us some quick broad strokes of how they could do that as far as storage and physical assets, take it home, do all that stuff as well, right?
Well, Delta is first and foremost the affordable alternative to all the other dealers. Those that are just in it to kind of prop themselves up and make their own livings better. Delta comes from a long stream of understanding that philosophy does not work and must be kept in check. We are there for the client. Without them, we do not exist. That's the simplest way I can say that Delta focuses on you as a client, and that we put first and foremost your happiness above our own. And that's how we achieve greatness as a firm, how we grow, and how we have 80% of our clientele repeat their business. They're happy, they're willing to refer somebody else. And that is exciting part about being in and at and with Delta Harbour. You can get direct delivery, John. Simply buy, take it home with you. You can store it, put it in a registered account. We're going to talk more in the coming weeks about the registered accounts. We'll do a show just on registered accounts, but you can put this in your TFSA, RRSP, and you may have already got the money to do it because it's sitting in another RSP account at another institution, which qualifies you to be in this program. So if you want to take all those and put them together, study, learn, educate yourself, deltaharbor.com is the best way to do it.
And the phone calls, we wrap up last moments of the show, 1-888-335-8645. And as Darren mentioned, deltaharbor.com, Harbor with a U. We'll catch you next time. Hard Money on Sauga 960.